Hi everybody, and welcome back to FANG Friday, except that this edition is as of Thursday in celebration of this Easter time, so welcome to FANG Thursday instead. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. First and foremost, I trust that everyone will have a happy Easter. The weather promises to be excellent over the weekend. Sunny and temperature highs of 11 degrees Celsius. Almost makes one want to get out and plant something in the garden, doesn't it? Now, there are three things which I should note today. The first is that this is what I might call a conveniently short week because we really are waiting anxiously for all of those earnings. And I say that because, second, the market is waiting for earnings reports to give the stock some direction going forward from here. Although, third, maybe those reports don't mean a thing. As one Dan Ives of Wedbush suggested, the NASDAQ is in a twilight zone. He said that tech stocks have become the new safety trade, with big tech leading the way. That was the environment last Tuesday when Micron Technology, for one, reported brutally awful results. He saw that revenues had plunged 53% year over year. The company posted a $2.3 billion loss. Gross margins were negative. The operating loss in the quarter was $2.3 billion, was the biggest in the company's history. And even after a massive inventory runoff, their inventories were still up 22%. Well, FANG Friday subscribers, who cares? The stock jumped $4.25, 7.2% the next day, before setting back a bit. The real issue may well be that investors are looking for a bottom in interest rates and therefore, or maybe I should say a peak in interest rates and are looking for a new bottom and therefore a market low. So they are no longer willing to respond to poor results with big price declines because those results reflect the past, not what is coming in the future. So, should we care what our FANGs report? May well be the burning question of the day. Well, in a moment, we will try to see what the FANGs are actually thinking. Certainly, the key indices are not helping us reach a conclusion. All three of the key North American stock indices are coming up to, but still just short of, their key resistance breakpoints. And so, right now, we still need to exercise caution in our market optimism, but also be flexible enough to be ready for a breakout, good fundamentals or not. Maybe a breakout is coming, or perhaps a near-term top is forming. Hopefully, this crop of quarterly earnings and company updates will clarify some things for us. So with the admonition that almost nothing that occurred in the past week was, I believe, helpful in the slightest in looking forward, let's take a look at what did occur and what signals investors have been given, if any. But before we take a close look at those FANGs and what's been going on, as always, I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel and we appreciate it greatly. I will remind you that we are almost at 2,000 subscribers, so it would be great if you could help us get over that milestone. Okay, turning to the FANGs, the first one is Meta, and Meta just keeps soldiering higher and higher, doesn't it? It's look at that turn up in the fair market value. Now that's of course estimated, but what's the market hoping for? That Zuckerberg will be able to, between buying back stock and firing people and helping margins that way, he'll be able to get back to that fair market value trend and therefore get his stock back up to this rarefied territory. Well, remember it had hit the bubble price 3 times, before we had that big crash. So that's what the market's hoping for, and Until it's proven otherwise, I think it's heading higher, definitely. NVIDIA is, well, we know why NVIDIA is strong, because, of course, of the strength in cryptocurrencies and in the Bitcoin. But having clamored over its HB5, which is 26 times book value, the stock has sort of been stuck there. Now, it has rallied today after setting back to it. So we are watching this closely because this is... although I think it could be heading for its HB6, which, as you remember I told you, was a 22-year high going all the way back to the year 2000. We'll have to see whether there's enough in the earnings department to get there. Netflix, well, Netflix hit my bubble price target and then set right back dead to its mid-super growth, which is 5.5 times book, before rallying again. Now, I don't know whether this is rolling over or not. We will have to see. Myself, I do remember that the company has promised a poor first quarter, so we'll have to see how the stock reacts to that. Tesla is a real conundrum right now, isn't it? We had a beautiful bottom at its bubble price, okay, and a lovely rally, but then the market began to roll over, and it actually rendered a sell signal when it broke down below its HB2, which is 12 times book. Okay, and it stayed there for, well, we had 2 solid weeks here. And so that triggered our 3% 5-day rule sell signal. Well, that had barely been given when the stock broke out again, and virtually almost rendered a 3% 5-day rule buy signal again. Now, very recently the stock has broken down again. So remember what I said about this kind of trading, I call it sloppy or indecisive trading. And very often that kind of trading leads to lower prices. So we are going to watch to see if it can get itself back on side quickly or not. Amazon just remains in a kind of no man's land. It did hit our bubble price sell there, and that was our last signal that we've got. It never got low enough to reverse that, and it's been just moving sideways between its bubble 7.4 times book and its mid-super growth. And of course what we're looking at here is this down this down staircase trend in the fair market value. Very clearly this quarter is either going to reinforce that or reverse it. We will have to see. Alphabet remains, again, trading indecisively. Now, the last time when it was trading around its mid-super growth, 5.5 times book, the trend was much tighter. This time around its low super growth, 4.5 times book, the trend is much looser. But it remains, as I say, indecisive trading. And the same thing, by the way, with Microsoft, although both Alphabet and Microsoft have had good days today as we finish the week. Now, Apple is an interesting problem in a sense. When we listen, there's the 5-year chart of the stock, and what you see, of course, is these downward trending lines. That is the trend of the book value of the company, and that's because the company has been buying back stock. And the question is, if the company is buying back stock and the balance sheet's disappearing under your feet, why has the stock been rising? Well, the answer actually is quite easy. If we click on that little box at the bottom, the price to book, what we see, instead of the fair market value, we see the return on equity. And what shows here is a steady rise in the return on equity as the company has been buying back stock. Now, very recently in the past quarter, it's turned down sharply, but that's only because we don't have the balance sheet for the past quarter. If the company remains true to form and has been buying back stock, as I understand that they have in spades, then what we may well see is that this trend, this ROE trend, is going to keep rising. And when ROE trends rise, it tends to push up the valuations of those companies as well. So very clearly, I think Apple is waiting to see. Now, to sum things up, Meta continues to trade confidently above its super growth price. That's 3.5 times book, and our buy signal remains solidly intact. Mind you, I want to see the latest quarter to make sure that things are on tap for the hope for rebound in those earnings and fair market value trends. Second, as it has been for the past 3 weeks, NVIDIA has broken out over its HB5, 26 times book, where it has been holding since then and could be heading to its HB6 for 33 times book, which would be tied for a 23-year all-time high. You should watch closely to see that it can hold here, but the recent almost astonishing strength in cryptocurrencies may help to push it there. As far as Netflix is concerned, following my sell at the bubble price in February, the stock fell right to its MSG price, 5.5 times book, and it's been enjoying a nice little pop. For the longer-term investors in the crowd, I'm not totally optimistic that the setback from the bubble price is over and done with, but I await the first quarter with interest to see how the shares can hold. You will recall that the company did suggest caution for the first quarter results after its fourth quarter numbers were announced. Apropos of Micron Technology, however, maybe a poor first quarter won't count anyway. Looking at Tesla, 5 weeks ago, we saw that Tesla had a technical breakdown below its HB2 or 12-time book, held just long enough to give me a confirmed breakdown using what I call our 3% 5-day rule. Then the minute that the market gave it, the stock did an about face and broke back up again and out. Talk about indecisive trading. Finally, on Wednesday and today, the stock looks as if maybe it's trying to break back lower again. Well, you remember what this is, don't you? It's sloppy or indecisive trading, which usually leads to lower prices ahead. But I think that we need to wait and see what this quarter brings and what its new balance sheet actually shows. Amazon continues its modest rally, but if history tells me anything, it should continue to slip back to its mid-super growth price. 5.5 times book, its very long-term low. The question is that miserable earnings fair market value trend for real? In which case, a lot of caution is required here. Or will those layoffs be a harbinger of a rebound in earnings and reinvigorate the stock? Alphabet and Microsoft have continued to dither on either side of their recent breakpoints for some time now, with what I call indecisive or sloppy trading. While both have broken to the upside, both have been a tiny bit weak lately, and this current quarter may help provide some resolution as to which direction those shares should ultimately take. As for Apple, as usual, I really want to see what their new balance sheet brings, although I know that the company has been quite active in buying back stock this quarter. Perhaps that guesstimated HB6 price, that's 33 times book value, will prove to be support, but there is no rush to make any hard decisions right now. And so I will continue to put it down as they hold and wait and see. I have to finish off by reminding you that unless or until the Standard & Poor's is actually able to break out over its super growth price, or 3.5 times its book value, which seems somewhat unlikely at present, I would treat any exposure to the NASDAQ stocks at this point with some considerable caution. The NASDAQ itself actually has a fair way to go before it could render a supporting buy signal. So I have to repeat that what we are seeing is a rally only. To remind you, and give you some notice, I'm scheduled to appear on BNN Market Call a week Monday, April the 17th. So get any questions that you might have for me in right now, as next week will be too late. Not all questions that are sent into BNN are actually asked, by the way. So let me know if you do send in a question, and I will try to make sure that it is raised on air. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I will see you next week, and in the meantime, do have a very happy Easter.